26th of October, Wednesday. Let's write a letter to Federal Reserve. Right, apology again guys, I'm still not feeling that well, but I still determined to do a video every single day, and today is about writing a letter to Federal Reserve because it seems to be a normal thing right now. I'll explain to you more in detail shortly. But once again, before we go into that, take note of that. Make sure that you do your risk assessment properly, and thank you AIMS for the kind sponsorship. Now, first of all, yesterday I really has a terrible time recovering from my illness, but I still managed to do this big drama video for you guys, and wow, not too bad. In less than 16 hours, more than 400 overviews. That's a surprise because compared to 7 days ago for 451 views, we are almost there. Thank you guys so much, and of course we are reaching the 700 subscriber. Thank you once again. Now, what's more important is that yesterday I said that after the huge selling off in the Hong Kong and China market, I do expect that the market will rebound today. And truth be told, the market today recovered more than 500 points. This is incredible. But the thing is this enough? Or is this a technical rebound, a dead cat rebound? Now, in my opinion itself, right, I believe, as I said yesterday, if the rebound can't come in fast enough, then most likely this could be a dead cat rebound and selling will continue, because you must understand, when the economy loses foreign investors, this is no joke at all. Now, for today, the main thing is the Alphabet earnings wasn't good. I already told you guys that most likely the technology companies will not be doing well because Tesla already showed that. And of course, now we have this Alphabet coming in, and the main thing is that they say that their main reason is because the search engine has went down lesser, the digital advertisement has went down too, and of course YouTube also. Now think about this. Recently I realized that a lot of YouTubers are actually coming online and says that they actually lose they're earning lesser right now because apparently YouTube is not giving that much exposure for them. So this is a real big reflection of what is happening right now in the economy. So look at a chart right now. This is Google. Now the thing is this, I was giving a forecast. I said that if Google can go higher, we could see 106, okay? But if not, it may come back down to 100, okay? That's what I mentioned a couple of days ago. And if you look at it right now, right, this is what's happening. Now Google is down by almost 7%. It's trading at $97.60. That means it's trading around here, guys. This is really bad, okay? So you can see that the market bought up ahead of the earnings. So I'm going to give you a very simple understanding here. So what is going to happen is this, guys. Think about this, okay? So everybody bought ahead of the earnings, and now they're going to be disappointed because the share price is going to be around this point here, right? It's going to be a markdown right here. So what will happen is this: if the market can rebound and go up, then this is the start of the bull market, okay? Mark my words, okay? But if this doesn't recover, then I'm so sorry, we're going to see further selling, and there is a possibility to see $93 traded in about 2 to 3 weeks time. And of course, this will basically restart the bear market selling. All right, so this is something very, very important because people are buying ahead of it and the earnings disappoint. Okay, this is not a good sign. Now, Microsoft earnings was pretty decent, okay, pretty decent, but the weak guidance is not good. And of course, again, they are also warning of this cloud computing slowdown, and that is one of the main driver for this Microsoft. So I kind of expect that Amazon may not be doing well. That's my point here. And of course, same thing again, advertising is slowing down, so obviously the economy is not doing well, hence we have such things, right? So it's very different from what Joe Biden has said. So now the thing is this, guys, take a look, everybody. Now this is what I have for you, the updated on Microsoft. Now 250 is actually the previous high, and that is one resistance that I think so. And you can see that same thing again, the market bought ahead of it, okay? So of course, if the earning was good, we may see all the way to 265. But now we have a problem, guys. After the Alphabet, right, and of course the guidance from Microsoft, my god, the share is down by almost 6% at 235. So which means it's back down to this point here. Okay, so it's exactly what I predicted. So now the thing is this: if the market, all right, can recover, that's a good sign. That means that the market doesn't care what's happening right now. They're gonna buy into the market. Apology on this, sorry guys. But if the market actually stays down, this time now it can be a bad news, because this was where the Microsoft came in at 220 and with a strong support. which volume bring it up all the way. So I kind of suspect that probably the boys already has planned this, alright? That's why they buy lots and lots of them at 220, 230, and now they're telling the whole world that, you know, things is good, it should be rosy and stuff like that. So I'm gonna play the devil advocate here. So 235 is going to be a very critical level. If it cannot stay above 235, then 220 will be next once again. Now, why do I talk about the letter to Federal Reserve? Because remember, just October the 10th, okay, October 10th, Cathie Wood came in and informed Federal Reserve that they should be focusing on the two variable, which is about the downstream inflation and employment, okay? And the thing is that she felt that it is really uncalled for a higher interest rate at such a speed. Now, we understand why she asking for that, because look at her share price, ARKK, right? So now the thing is this, everyone were buying in anticipation of Microsoft and this Google, and now ARKK at 37, all right, that was what happened. But you look at it, it's still on a downdraft. So I believe that, right, with no extra volume coming in, there's a good chance ARKK could test again $35. And I repeat myself again here, so I believe that if, let's say, if this is going to be the continuation of the bear market, I'm very confident that ARKK will see $29, and that will be the low of this year and the previous year. And this is not going to be fun, okay? Now, who wrote another letter to Federal Reserve? Well, this guy. Apparently, a guy called Sherrod Brown, a US Senate, actually wrote a letter to this Federal Reserve, and clearly, but very, very heavy words, say that, right, you must not lose sight of your responsibility. Wow, pretty heavy, right? Now, why? So let's take a look here. This is the exact letter. They said that we have seen historical job growth. Okay, things are doing better right now after the pandemic. But if you keep on doing higher inflation, increase the interest rate, it will again cause problem, especially for the people on the street. So this time around, he's focusing a lot on the people on the street, and feel that, right, if this is going to continue, this will be bad. And one thing he added on is that if Federal Reserve is to continue to increase interest rates, right, the regional, all the other central banks will be increasing interest rate too, because they have to follow, and that will create a global recession. Now, this is the thing that's trying to put the blame on Federal Reserve for doing too much right now. And of course, the thing that is going to be unnerving is that, right, he added, right, okay, this will become a big problem, and the consequences itself is going to be too much to bear. So he is actually throwing the curveball onto the Federal Reserve and telling Federal Reserve, like, look, stop increasing interest rates. Now, the thing is this, we must understand, the Federal Reserve increased interest rate was primarily because the inflation is going up at an alarming speed, as like some current CPI is at 8.2%. And if they really need to bring down inflation to the 2% mark which they wanted, then there's no other way out, because there's no way that they can reduce the liquidity in the market. That's why the Fed fund assets is still maintaining at the high level. So I'm just wondering, if when the QE was happening in 2020, 2021, no one complained, everybody's happy, inflation go through the rooftop, people don't care. But now, just because that probably everybody's asset got affected by 20% or 25%, everybody now is shifting the blame to Federal Reserve. Now, this is not very, very fair, right? Don't you think so? And of course, in my opinion, is this, guys. If you can actually think about this right now, right, I cannot see why would Federal Reserve be bothered by all these letters. So this is Sherrod Brown. This is a US Senate. So I just feel that, right, all these are just, people that are pretty unhappy, and they are pretty affected. But to me itself, right, you just have to follow one very important thing. It's the US dollar. Now, the US dollar, this is something that I shared about 2 days ago. I mentioned that the US dollar now is at a very important neckline at 11,111.80. We're going to be very near to the common point, and if the market reaches common point, the market most likely will test this channel here. And I was sharing this with some of you guys on the video, and now let's have a great update on this right now. You can see that the market has broke the channel instead, and is now at a very curious position. This is the neckline I mentioned, the second neckline, and the RSI has came down to the same common point. So if the market stays around here, I believe that tomorrow will be very critical. Now, if the US Federal Reserve really heed those advice and really pull the handbrake, then of course the dollar will come down a little bit, okay, at least 108. But I believe that the recent selling is got nothing to do with all these letters. In fact, it's probably because BOJ is involved in dumping a lot of treasuries to lower down the yen. Okay, this is what I felt. And of course, the main thing is to double check the yield. Now, the yield has also pulled back down. That means a lot of treasuries have been dumped, okay, because the treasuries prices and the yield, they are inversely related. So as long as the yield is coming down, the bond price is going to go up, right? So the selling itself, right, created something like this, okay? So this is what I felt that's happening right now. But still, I'm going to put this line for you guys, and I said this very clearly, that if let's say that the trend line, the market hit this trend line, I'm so sorry. If it stays on like what I said before, it's going to go up again. And this time around, it's going to be 4.5%. So of course, fundamentally, if you remember back here itself, when the market was coming down, the same story was, they're telling you that there'll be a rate cut in 2023, and the market so-called believe in it, and that's where the yield from this point at 4% put down all the way to 3.6%. Now they're from this high level of 4.3, they're going to bring it back to about 4%. And the story have changed a little bit. They said that they're going to do some QE instead. To me itself, this is all BS Wall Street stuff. I still believe that the yield is going to go higher, but of course, the market is most honest. We let the chart decide, okay? All right, let's go to the market right now, look at the charts and see what we have for you today. Okay, here we go. All right, so first of all, now we can see that the Dow is still marching up higher. Now the Dow has crossed, yesterday has came down below the 85% mark at 31,411. But I mentioned, as long as the Dow stays above 31,411, it will likely go higher, right? So the midpoint is somewhere in the middle. I haven't calculated yet, but you can take this number, 33258 plus 31411. You get something in the middle. This could be the possible level that the Dow could be heading in the near term, all right? So as long as the Dow Jones doesn't go below 31,411, and means when I say go below means it close below, then the upside is still there, okay? This is something very, very important. Now the China market, my God, this is not a good sign, because the China market did try to recover today, but look at it, again, it has came off. Now this is probably a indication of a very big movement coming in. Now the bigger upside movement can go all the way to 12,280. The downside could go all the way down to 11,470. So guys, watch out for this. This is going to be a big movement coming in, all right? And for the Hong Kong market itself, right, it did went up to 15,574 earlier, but now it has pulled back 200 points because of the China market. Let's see whether the Dow can push it up a bit higher. Now let's look at the Dow for today with the TWB system. Now the Dow has now crossed the MA 200 level, the level that I mentioned yesterday, and it's moving higher. Now yesterday's high was at 31,902. I kind of believe that the market will purposely tap the high before we see any form of resistance, okay? Now the upside can still all the way go to 32,198, and it's still the third day. Now based on my theory, as long as the market stays above the BNB RL, there is a chance the market could go all the way to 32,198, because that is a third working day. And both my KSI and my KRW are both in the positive light at the moment, so it is very, very possible, okay? Now the Nasdaq is trying its best to go back above 11,526. This is a pivot 2. Now as long as the Nasdaq can stay above pivot 2, fine. But the indicator here itself shows you red but cyan, so it'll be a mixed back signal. But still, 11,526 is key. The market must stay above the 11,485 MLP. If it can stay, if it goes below that, then it may pull back down to 11,225 in the near term. All right. Now S&P 500, earlier itself we expected it to drop because it went below MLP, right? But now it has recovered and it stays above the pivot 2 level. Now if this continue, it may go all the way back again to 3863, because that is a KCB. Now yesterday the market touches KCB and pull back, but this part of the BNB RL, the third working day, so it is possible if the market to push up to 32,000 for the Dow, then S&P 500 can go to 3886 level. All right. Now the market that I really want to talk about it today is the crude oil market. Now ridiculous but incredible. This is the fourth doji in the crude oil market. Now, I've never seen this before. Now 2 dojis is still not not very common. 3 dojis is very rare, and 4 doji is definitely once in a blue moon. Now look at it on my indicators. This is not a good sign. Though that many traders looking at this is a very pretty positive one, but if you look carefully, if this is the BNB SL level, this is actually the SL level. You can see the market been tapping. Then this is the 5th tap. Now the KSI and my KCX are both red, so that means that the sellers are actually in the market. So now, very important guys, remember this: if the continue to go higher, it can test 85. Okay, it can go there. But if based on what I'm seeing right now, if the KCX and my KRW and my KSI in the same direction, if the market stays downwards itself and close below 84.23, that'll be the first time in 5 times, then the selling can bring it all the way down to $80. And that the only reason can happen is because people are very fearful that the economy is not doing good. Okay, there's something to watch out for. Now for gold price today, we can see that there's some upside movement because the dollar is weakening, so the gold blasts up today. Now gold has now touched the KCB level at 1672 level. I think there's a good time to take some profit, even though it's a CCRY, but taking some profit is a good idea because I still don't think that the dollar will go down too much instead. All right, but of course, if you believe that the dollar gonna fall, then of course you can aim gold to be at 1698 level. Now for me, it's I repeat, take some profit at 1672. The rest, let the market decide. All right. Now silver has mounted up again. It's very near to my BNB extension 1977. It took about 4 days. So that's to you that's how powerful is my BNB. As long as the market stays above the BNB RL, usually it will hit the extension. And last but not least, we have Ethereum. My God, Ethereum blasts up all the way to 1540 level. Now, I already told you guys Ethereum can buy. I already told you that because it has shown me strength. KCX has turned to blank. When it's blank and KSI is green, usually that is a blast up. Can you see that? So when it was blank and no KCX, that's why you can see the Ethereum shooting up itself. Now, of course, people have been asking, is it a new start of the cryptocurrency market? No, it's because the dollar has came off and dollar has already been pressurizing all this cryptocurrency, and that's the reason why you can see there's a sudden more of interest at this moment right now on the KSI and the KCX. That's why I did tell you guys that if Bitcoin finds strength, it can go back above 20,000. But if you ask me, it's alright. This is not going to help once the dollar comes back. So remember this, guys. Once the dollar comes back, we can see it coming back down again. Alright, so traders, go slow on this. Watch the dollar and the yield closely. This is Kel signing off. Thank you once again. Bye bye. Wish you all the best.